Let's start with a big question. What's the point of money? For, decades, investing has really been about one thing and one thing only, making more of it. Simple, right? But what if that's starting to change? Today, we're going to dive into something called ESG investing, a movement that's asking a much, much bigger question. Okay, so really think about this for a second. What if the money you put into the market could do more than just, grow your bank account? What if it could actually help fight pollution or fund new clean energy projects or just push companies to be better citizens of the world? This isn't science fiction, folks. This is one of the single biggest shifts happening in global finance right at this very moment. You see, for the longest time, the main question for any investor was super simple. How much money is this going to make me? That was it. That's the old way of thinking. But this new model, it asks something completely different, something way more profound. What impact is this going to have? And believe me, that one little shift in perspective is creating absolutely massive waves. And this new question, it's not just some little niche idea for a handful of investors. Nope, it's the engine driving a huge movement that's completely changing how money flows across the globe. So let's break down what this is all about. It's called ESG investing. And those letters, E, S, and G, they stand for environmental, social, and governance. It's basically a framework that helps investors look beyond just the raw numbers on a balance sheet. It's a way to size up a company's ethics, its sustainability, and its overall responsibility to the world. And let's be clear, this is not a small trend. We are talking about trillions with a T of dollars. Seriously, the amount of money in what we call sustainable investments has shot past $35 trillion globally. You've got governments, massive pension funds, and even regular folks like you and me all starting to move their money towards companies that do well on these ESG factors. The scale of this shift, it's just staggering. Okay, so to really get this, we have to understand what those letters E, S, and G actually mean. Let's decode these three pillars and see what investors are really looking for. First up is E for environmental, and this one's pretty straightforward. It's all about how a company impacts the planet. Investors are asking some tough questions now, like, is this company part of the problem or part of the solution? They're looking at everything: carbon emissions, how much water they use, how they handle waste, and if they're adopting renewable energy. And here's how that plays out in the real world. An investor using an ESG lens is pretty much always going to see a company that's building solar farms as a better, more sustainable, and maybe even a less risky long-term bet than a company that's still all in on fossil fuels. All right, next up, we have S for social, and this one is all about people. How does a company treat its own employees? Are they paying fair wages? Are the working conditions safe? And what about the communities where they operate? How do they treat them? And here's the thing. This isn't just about doing the right thing. There's a real business case here. A company that's known for treating its people well, that's how you build a strong, resilient brand. It often means you have happier employees who stick around longer and customers who are incredibly loyal. And all of that is fantastic for the bottom line. And last but not least, we have G for governance. You can think of this as looking under the hood to see how the company is actually run. Is the leadership team transparent and ethical? Is the CEO's paycheck out of control? Are there good systems in place to prevent things like fraud and corruption? Because at the end of the day, good governance is really the foundation of a stable company. When investors see a board that's transparent and leaders who are ethical, it gives them confidence that their money is safe. It's honestly the best way to avoid those massive scandals that can absolutely destroy a company's value, sometimes literally overnight. Okay, so now we know what ESG is, but that brings up a huge question. Why is this all happening now? Why has this idea just exploded in the last few years? What's really driving all these trillions of dollars into sustainable investing? Well, it seems to come down to four main drivers. First, you've got younger generations, millennials and Gen Z, who are really demanding that their investments reflect their values. Second, governments all over the world are putting stricter climate policies in place. Third, the really big money, we're talking pension funds and huge asset managers, they're shifting their massive portfolios over to ESG. And finally, honestly, it's just smarter risk management. And this quote right here, it just nails that whole risk idea. See, investors are realizing that ignoring ESG factors is a huge gamble. Think about it. A massive oil spill, a scandal about working conditions, a corruption case, any of those things can absolutely tank a company's reputation and its stock price. ESG is basically a tool to help spot those red flags before it's too late. So, how does this actually work in practice? Well, one of the most popular tools out there is something called a green bond. The easiest way to think about it is like a loan, but with a special rule. The money has to be used for a specific approved environmental project. We're talking things like building a new wind farm or a clean public transit system. And the process itself is actually pretty simple but really powerful. First, an organization, like a company or a government, issues the bond to raise money. Then, investors buy that bond, which provides the cash to get the project going. Step 3, the green project gets built, creating real environmental benefits. And finally, the investors get their original investment back plus interest. So they make a return and they've helped fund a positive change. Okay, but it's not all sunshine and roses. This explosive growth in ESG has definitely created some real challenges and, frankly, some valid criticisms that we have to talk about. And the biggest one is a practice that really threatens to undermine the entire movement.
It has a name. It's called greenwashing. And what that means is a company spends way more time and money making you think it's environmentally friendly than it spends on actually being environmentally friendly. And this is a huge problem, right? Because it tricks well-meaning investors who are genuinely trying to put their money towards good causes.
So what's the solution to this? Well, it really comes down to two things: transparency and accountability. Regulators all over the globe are starting to step in. They're creating standardized rules for reporting, which means companies can't just get away with making vague, fluffy claims anymore. They're going to have to back it up with cold, hard data. When you step back and look at the big picture, what we're really seeing is a fundamental change in how we think about capitalism. We're slowly moving away from that old model that was all about profit no matter the cost to a new model that's trying to balance profit with purpose and responsibility. It's a really deep shift in mindset. And that right there is the core idea of the whole ESG philosophy. It's this belief that you don't have to choose between making money and making a difference. In fact, the most powerful investments of the future might just be the ones that figure out how to do both brilliantly at the same time. So this all leads us to the ultimate question, doesn't it? What is the future of finance going to be about? Is it going to be about profit or is it going to be about purpose? For so long, everybody assumed you had to pick one. But the answer that seems to be emerging from this massive multi-trillion-dollar shift is pretty clear. The world's biggest and smartest investors, they're not choosing one or the other anymore. They're choosing both. And that simple realization, well, that might just be the biggest financial revolution of our lifetime.